When will the bear market bottom? Guys, if anyone says anything other than what I'm not ready to say, they're lying to you. We don't know when. It is impossible to know when. There are 7.5, 8 billion people in this world, and I would bet just a few can actually market time. And the only reason I'm saying that is because just statistically speaking. So if you're new to this channel, I'm Paul. My job is to teach value investing because I truly believe that the more you learn, the less you will fear. And I also want to call out the financial manslaughter perpetrators out there on YouTube and in the world. I believe it's my job to call out financial BS. So back to the bear market. The average bear market lasts about a year. But guys, you have to remember that bear markets are going to be relying on different things, mostly valuation. The market's down about 20% this year, right? Okay, that's great. So let me draw an analogy here. Let's say you had a house that was worth $500,000. But somebody decided, you know what? It's a good market now. I'm going to ask $5 million. Is that overpriced? Obviously, we can all agree that this is overpriced. All of a sudden, they slash the price to $2.5 million. So you might sit there and say, oh my God, it's half off. This is a great deal. But remember, it's only a $500,000 price. That's where we are in the market right now. The market's down 20%, but the market was so overpriced that now with 20% decline, we're at levels that we saw before the bubble burst in 2000 and the Great Depression. That's how bad and how overpriced we were. This bear market is nowhere close to done, in my opinion. Now, am I being a FUD? Am I being negative? No, I just react to valuation. Just like in 08 and 09, after stocks fell, I have the emails to prove how positive and uplifting I was about stocks. My guys at Merrill Lynch and US Trust were saying to me, Paul, you're the only good phone call we get. And my reason was very simple. Stocks are so cheap right now, they're going to be a good long-term investment. Stick with this channel and you will see that other videos we've done where stocks have fallen 70, 80% are now falling into our warehouse. If I was against the stock themselves, I would never want to buy them, but I'm not. I'm against the valuation. This stock market has gone like this, and now it's like this, and it has to go like this. We're probably somewhere in this range. Okay, that's my guess. Is that for sure? I have no idea. No one knows. But I think we're off the highs. I'm hoping we're off the highs, but we still are massively overpriced if this is a historical average of the stock market. That's the key to remember here. Just because someone slashes a price on your favorite product doesn't mean it's on sale. It just means it's cheaper or less overpriced. That's it. It doesn't mean anything else. So I want you to remember that when you're going forward and looking at investments, it's not about the price you're paying, it's about what you're getting for it. Again, the more you learn, the less you will fear. It is fearful out there. Back in 06, I had friends of mine. And they sat me down and said, Paul, we want to save for retirement. So we started talking. I was like, listen, let me ask you a very common question. If stocks fell in half, what would you do? And the wife looked at me very straight faced and said, we buy more, right? I said, perfect. You guys get it. Fast forward 2 years. Stocks are falling like crazy. They've fallen over in half. I get an email from the wife one day. Paul, what are you doing? And I was like, well, don't you remember we had this conversation? I sat there and said, if this were to happen, yes, but I don't want the stocks to go to zero, but they've fallen in half. They haven't gone to zero. They won't go to zero. They sold everything. They sold everything. They sold everything when the S&P, I think, if I remember correctly, was around 750 or 800. And it went down to 666 in March of 09. So they probably felt pretty good. But guess what? When did they start buying back in again? I don't know, but I'm quite sure it was well above this level. That's the problem, guys. Your job is to sit there and put money in, month out, and dollar cost average, because you never know when the highs and lows will occur. Back when the S&P was at 2,000, I thought it was worth 1,300 or 1,400. Now, as the economy and stock market have gotten better and better and better, I don't think it's worth 1,300 or 1,400 anymore. It's probably worth somewhere in the high teens on the S&P. But it's still overpriced compared to where that is. Do you follow what I'm saying? As the stock market gets better and as the economy gets better, the stock market valuation will get better. But it took 4 or 5 years for that to happen. Did I think it was going to take 4 or 5 years? Absolutely not. But it still happened and valuations got better. So instead of trying to guess on the stock market value that goes like this and trying to you'll never sell here and buy here, ever. In fact, everybody does the exact opposite. They buy here and they sell here. That's why returns over long periods of time are crappy for investors. But if you dollar cost average all the way up and down, you will eventually pay this. And that is your goal. That is purely your goal, simple and sweet. Bear markets and bull markets are part of life. They are cycles. You shouldn't fear them. You should look at them as an advantage to go buy stocks cheaper. When bear markets occur, stocks are falling. If you love the S&P at 4,000, you should absolutely love it at 2,000. And if it falls to 2,000 and then goes even further, you should love it even more. That is the point of investing. And the more you learn, that that process, the less you will fear. When you understand that when you buy a business, when you buy stock, that you're buying a business, you will fear it less and less. You're buying a future stream of cash flow because every investment is the present value of all future cash flow. You want to buy that future stream of cash flow for less and less money. Over time, the market will be a weighing machine. In the short run, it's a voting machine. What that means is it's going to be a popularity contest in the short run. Whoever's most popular will go up, whoever's the least popular will go down. But in the long run, the financials behind the company, the fundamentals, the cash flow, the balance sheet is what is going to drive the value of the company. It has never, ever failed over long periods of time. And you might sit there and say, well, Paul, I don't care about 10 years. Why? You should only care about 10 years or more unless you're close to retirement. And if you're close to retirement, I would ask you to be a little more cautious on your investments. Pick less speculative plays because you're closer to the end goal and you don't want to take a 50 or 60% hit to your net worth. We've already seen people take 20, 30% hit this year alone in 6 months. Remember, stocks go down a lot faster than they go up. Go look at every crash in history, every bubble that has ever happened in history. This is how it goes. Ready? Boom. Prove me wrong. It doesn't go down like this. It doesn't go down like that. It just goes boom. Why? Because everybody's in the theater trying to get out when there's a fire and one exit. Everybody thinks they're going to be the person that gets out right here. They're not going to be. It just collapses. It's happened. Look at interest rates on homes. They literally went from 2.7 to 5.5 like that. Just like that. If you were out there trying to get a mortgage over and it took you 60 days, your rate could have gone up 1% in those 60 days. Things happen very quickly in the financial world. So I encourage you to come on the channel, subscribe to our channel, learn more, and you will fear less. It is very simple. I speak this, I'm very consistent, I'm repetitive because this repetitiveness works. It's been working for hundreds and hundreds of years. It'll never, ever change. If you like this video, please click right here and look at the video on the upcoming recession and how it can be the opportunity of a lifetime. Thank you very much.